All right, man. GM, everybody. Good morning. Cock-a-doodle-doo. I like that sound bit, man. I just like that sound of that chicken in the morning, man. Just get you riled up. But anyway, guys, good morning, guys. It is June 1st. Yes, indeed, man. In about 30 days, we're going to be closer to 2027 than we are to the beginning of 2026. So I hope you guys made the most out of your, I hope you guys made most of your first half of the year. Now, if you haven't, it just means you got half a year to make it all back. All right. So you still got half the year to accomplish all your goals. So don't be wasting time now, man. Time flies, man. Really, it does. Time flies. I feel like we just started 2027 and already we're talking about being in the second half. But anyway, guys, I'm gonna apologize ahead of time. I may seem a little bit out of it. I haven't had a good night's rest since middle of last week. I have been up almost all weekend working, okay? So I am a little bit dazed. I haven't slept, like, I haven't had extended sleep. Like, what I mean by extended sleep is something other than just a nap. I haven't had anything other than just a nap for the last few days. I think I just sleep like an hour or two at a time here and there. It's just been kind of one of those weekends where I'm just really extremely busy for some reason. But anyway, guys, neither here nor there. It's time to it's time to see how we're gonna make some money in this market. Now, as we always do, I will answer any of the questions you guys have. If you guys want to join me on the Discord, you guys are more than welcome to do so. Join me in the Discord. Anywhere you are watching this live stream, you should see a link to our Discord in the About section or in the Bio section. It's the Key Crew. Lock in and break out. Any questions that you may have about finance, money, trading, tickers, whatever it may be, or if you just want to come by and just yell at somebody, shit, I'll yell at you too, all right? Just come by our Discord. We got the VC open. If you want to join in on the live stream, you can, or you can DM me some questions. It's your boy Rooster on the mic. Yes, it's Money Maxxi. We are Money Maxxis here. We're going to talk all things money, markets, and mindset so we can try to make a little bit more money, try to get that cheddar to make our lives better. All that good stuff. Speaking of cheddar and making our lives better, we are not doing very good on the Hyperliquid account. So just to give you guys a little bit of update, I mean, we're not down. We're not negative. We're not negative. We're still positive. All right, we're still positive, but we're at about $470, $480 right now. It was at $510 last week. And then the week before that, it was close to $600. It just keeps going down. Yes, we got liquidated and we got stopped out on the gold trade. But then also, too, we got a little bit of a drawdown in the Brazil position in the last couple of days. As you can see, we started this account on March 23rd with $300. Right now, it's around $480. We're still 60% ahead, but 60% in the last 6-7 weeks is not very good, considering that some of these tech stocks have gone up. Some of these tech stocks have doubled in the last 6-7 weeks. So, I mean, I guess if you compare it to the S&P 500, if you compare it just to the straight index, we're actually doing well. We're outperforming the index, but we're not outperforming like some of these individual tech stocks. And so, okay, it's time to lock in and break out. Okay, it's time to, we gotta do something about this, Chad. We gotta stack some W's in this account. Okay, all right, so. Right now, we're in a little bit more of a drawdown in the Brazil position. There's a little bit of funniness going on in the Brazilian markets as they are getting ready for their election. Flavio Bolsonaro came over to the United States. He met with Trump. He is the opposition leader right now. He is who's going against the incumbent. The incumbent's name is Lula. Lula da Silva. And Lula right now is the president. Lula beat Jair Bolsonaro, who is Flavio's father. Okay, Flavio's father used to be the president before Lula, but he is under arrest for trying to stage a coup. So because of that, his son is running, and his son got it was found that he's connected to some scandal-ridden bank executive. And because of that, now he's like touring the United States, trying to get his buddy Donald Trump to put some kind words in, all that good stuff. But anyway, because of that, we saw some of their markets have a little bit of volatility. I think it's very temporary. It's kind of like how we entered Brazil back in July of 2025. Remember, we got in because we saw a huge sell-off in Brazil because of Trump putting tariffs on Brazil, which he took away 3 weeks later. But at the time, it was a lot of drama, but we were able to get our price because of that drama. I think it's kind of similar in here. Yeah, it kind of overshot to the downside, but I think it's temporary. I think it come back up. We already got our position. We had 2 buy-ins. I bought in right around like that 37.20, but then around the 36s, I also bought in some more as well too. And I've got one more buy-in ready just in case if we dip all the way down to about 35. Right now, I believe EWZ is around $36 and some change right now. I think it's up in pre-market if I am not mistaken. Let's take a look at what's going on in pre-market. EWZ in pre-market is around flat. Okay, so we shall see what happens when Brazil opens, or I guess when the market opens. I think Brazil and the United States, they open around the same time. I think Brazil opens maybe 30 minutes earlier than the U.S. I think they open up at 9 a.m. Eastern because I think they're 1 hour ahead. So they open at 9 a.m. Eastern. And of course, our markets here in New York open at 9:30. So we'll see. We'll see what happens. But right now, we're a little bit of a drawdown in the Brazil position. We got stopped out on the gold. We're still 60% ahead from where we started in the hyperliquid account. And again, a lot of that has to do with money management, risk management. And I keep telling you guys, the number one thing about all of this is risk management and money management, and everything else kind of handles itself afterwards. Okay. All right. So we need to play some more trades. We need to try to win back some of that, some of the gains that we lost. Now, last week we had some crazy developments in the market. We saw some of the hardware stocks slow down in momentum. We saw some of the AI stocks and the chip stocks, they slowed down a little bit, but we saw software stocks rally. Okay, now software stocks have not rallied as much as some of the hardware and chip stocks. Okay, so remember back in April 15th, or April 13th, if you guys remember, some of the most heavily shorted stocks caused a short squeeze in the market, and most of the stocks that were heavily shorted were AI stocks, okay? Because remember, at the time, beginning of the year, people were talking about, is the growth in revenue from AI, is it sustainable? That was the topic at the end of 2025, early 2024. It was heavily shorted, and then all of a sudden, when the markets reversed, all those hedge funds who shorted at the bottom or who hedged at the bottom had to cover their shorts. And because of that, it caused a short squeeze, okay? Now, some of these software stocks have been shorted even after that point. And as you can see, if you look at Microsoft, if you look at Adobe, if you look at IGV, which is the software sector ETF, they did not have anywhere near the rally as some of these other NASDAQ stocks and other AI stocks. So, for example, software stocks are still kind of at the lows. This is IGV, which is the software ETF. And as you can see, it did recover a little bit, but it didn't go anywhere near the all-time highs. All right, it didn't go anywhere near the all-time highs. However, on Friday, it popped. Okay, it popped. Some of it may have been because of Trump. Trump listed all these software stocks that he told people to go buy, and then he also said that he was going to invest invest some of the U.S. funds into some quantum computing stocks, and we actually saw IBM pop up. Funny thing about IBM is that right now, if you actually go look at CT, if you go look at FinTwit, if you go look at Twitter and you search IBM, you're going to find a video. I believe you're going to find a video of Trump with the CEO of IBM saying, oh, probably the stock has more room to go up. You probably have seen that video all weekend, okay? It's funny how they're actually positioning that as a new video. It is not a new video. It is actually an old one from December 10th. Okay, so if you actually look at IBM, you're gonna see that video pop up. Yeah, this one right here. Trump says IBM is going to go up a lot more. This video, you're gonna see, you've seen this video popped up, May 30th, all over the weekend. People just posting this video saying, oh my God, this is the next stock that Trump is calling out. But I just want to let everybody know, I just want to make sure everybody knows this, that video is not new. If you actually go to rollcall.com actually has all like the big press releases from the president and from major companies, major political organizations. And that video is actually a video on December 10th. That was a December 10th business roundtable where the CEO of IBM showed up. And in the middle of that video is actually where this video is actually taken from. So as you can see, it has got the red plants and everything, the kind of the Christmas colors, everything. This was December 10th. Okay, so this video that everybody's circulating around saying that, oh, Trump just called out IBM is actually a video from December 10th. Now, I'm not trying to like cause any bearish FUD or anything. I think IBM could still go up. And again, that $2 billion quantum computing news, that is timely news. That is what happened like on Thursday or Friday. But Trump actually saying that the stock of IBM was going to go up, that's more like December 10th. The reason why I'm letting you know that is because it is well known that some of these hedge funds, they will try to circulate false narratives on social media to get people to do stuff, okay? So just keep that in mind, all right? Do I think that software stocks could pop up and squeeze higher? Yes. Do I think it's going to be sustainable? No, but I think it is a play. It's a play that we can play on, okay? And I am looking to play that. Some of the conditions that Microsoft is going through right now is very similar to what we saw on April 13th on stocks like Micron, stocks like hardware stocks, NVIDIA, even on the indices like, Triple Q, which is the NASDAQ index, and then also on the S&P 500. It's the same thing, but the scale is a little bit different because on April 13th, if you remember, actually, let's go to a S&P 500 chart. If you actually remember that's when the whole Iran escalation was at its peak. Remember this? Iran escalation happens in like February, March, and then we went all the way down, and we bounced off the lows here on April 10th. And then remember, I was like, oh, I'm getting ready to short the market. I remember we shorted the market right around here, this Thursday, Friday. And then on Monday, we saw that outside day up. We saw all the derivatives unwinding. And I said, you know what? I'm seeing derivatives unwind. I'm seeing short positions unwind. We are not going to stand in front of this train. And we just exited those short positions right then and there when we saw those derivatives unwind, right? So That's kind of like what happened. Some of you probably wondered at that time, like, because I rarely change a position just from 1 or 2 days worth of candles. I'm not usually like that. I usually do not change a position just because it goes against me for a day or two. But that day was a little bit different, okay? Because that day there was evidence of derivatives hedges unwinding. Okay. So one of the things that people don't realize is that most of this rally is because of a short squeeze. Lots of hedge funds actually sold ratio covered calls. They sold calls and they bought puts as the market was going down, not before, but after and during. Okay, that actually does make a big difference. Okay, because really what they're doing is they're selling calls and buying puts are bearish positions. Okay, so these guys are getting bearish as it goes down. Okay. And then when it reverses, well, now they're forced to cover, right? You bought puts and all of a sudden the market goes against you. The market rallies. You're bleeding. Those puts are bleeding, right? Now, ratio covered calls, that's even dumber thing that these hedge funds did. So basically, for every 100 shares, you can sell a covered call. Now, selling one covered call for every 100 shares, that actually reduces your risk because you actually are getting paid premium up front, all right, while your stock goes down because you own the stock, right? Now, if you sell 2 or 3 covered calls for every 100, now you're selling a ratio covered call. And at that point, if the market goes up, you may be liable for an infinite amount of losses at that point, right? Because you have more calls short than you have shares long. All right. Now, if you're not an options trader, if you don't know what that means, just know that these hedge funds, they over leveraged on the short side as it was going down, probably because they were panicking. They were like, oh my God, the market's coming down. I need to generate income from my portfolio, which means they sold extra covered calls. And then they also had to buy puts to stop themselves from a margin call. All right. And so then as the market reverses, then they're forced to short squeeze. Then they're forced to buy back those calls. They're forced to sell their put at whatever price they can get. It is price indiscriminate. And so because for them, it's either cover or perish. They're gonna try to cover as much as they can at no matter what price. And that's why we have been seeing this huge rally, is because as these hedge funds and speculators buy back the calls that they sold at the bottom, all right, they're buying it at whatever price. Now, whenever hedge funds or speculators or traders or the market in general does one thing, there's somebody called the market maker who facilitates that trade, who takes the opposite side of the trade. Okay. They're the ones that provide liquidity to the market. These are called market makers, right? So just as an example, if I'm buying stock A, all right, who am I buying it from? All right. Who am I buying it from? I mean, yeah, there's algorithms out there that match orders, but sometimes there might not be enough orders to match. So then there's somebody called a market maker who's in the business of being the other side of the trade whenever you need it. All right. And there's regulations around it. They have to have certain orders open at all times to facilitate a smooth market. All right. So there's people called market makers that do this. Now imagine if I'm a hedge fund and I sold all these calls and now I have to cover or perish and I got to buy these calls back. That means when I'm buying these calls, the market maker has to sell me a call. So the market maker selling a call is a bearish bet on their books. And most market makers, what they want to do is they want to keep their books even. They want to be what we call delta neutral. So for every 1 unit up or down a stock goes, their portfolio value doesn't change. They're just completely neutralized based on many opposite positions. So again, if I'm a hedge fund and I'm buying calls, the market maker is selling me those calls. Selling a call is a bearish position. So to offset that bearish position, they have to buy some of the underlying stock. All right. So that's the vicious cycle that is a short squeeze. Okay. So as hedge funds are forced to buy back their calls, the market maker sells the call and buys the underlying stock to keep delta neutral, which causes the market to drift higher. Right. Same thing with puts. If I'm a hedge fund and I bought puts and I need to sell that put, then the market maker has to buy that put. And buying a put is a bearish position for the market maker. So they have to buy some of the stock, go long some of the stock to offset that bearish position. So again, speculators, they got to buy the calls back or they got to sell puts, which means the market maker has to be on the other side of that trade and buy the underlying to even out their books. And that's why we got this short squeeze. Okay. Now, why is this important? I am starting to see that in software stocks. Software stocks have been so shorted that we're actually starting to see software stocks have a little bit of squeeze. Now, the thing is, the scale is a little bit different here because when some of these AI stocks were being shorted and when they were getting squeezed with the indices, with NASDAQ, with the S&P 500. I don't think the indices are that heavily shorted. So the potential for a short squeeze from the overall index is probably low. All right. But having said that, these software stocks could still squeeze higher. And I want to play that squeeze. Okay. I want to play that squeeze. Oh my goodness. At 4 a.m, I was actually looking at Microsoft on pre-market, and at 4 a.m, it was around $459 a share. I should have taken the trade right then and there, but I didn't. I thought maybe during the day, maybe it comes down a lot, or maybe it comes back a little bit. Maybe it retraces some of Friday's candle, and maybe we can get in a little bit lower. And of course, Murphy's Law, because why the fuck not? Right now, it is now at $468, $9 higher than what I saw just a few hours ago. So there we fucking go. All right. So maybe it's already too late. But if I see any dip, if it goes anywhere near the closing price or anywhere near Friday's prices, I want to jump in. Okay. I want to jump in and play the squeeze until it gets to, maybe near all-time highs again. All right. That is a $20, $30 move. That's a significant move. OK, that's a 4 or 5% move. If we can get a 10x leverage on the hyper liquid account and get 10x leverage on that, I mean, that's a 40, 50% return right there. I mean, I want to play it. OK, so, yeah, I mean, it would have been great if I just jumped in right at 459. I don't know why I didn't. I thought, maybe it pulls back a little bit. See, this is the problem with chasing momentum, because you can get screwed with leverage if you chase momentum. This is why I don't like chasing momentum, because I usually use leverage and I usually use options too. And when you chase leverage, all it takes is one bad candle and you have to get out, right? So, oh, yeah. Anyway, well, we'll see. I mean, I do want to play Microsoft. I do see the same conditions as what we saw on April 13th. Well, the same conditions that we saw on like MU, on Micron, and some of these other like hardware and AI stocks. We're starting to see that in Microsoft. And again, the scale's a little bit different because on April 13th, we also had the NASDAQ and the S&P 500 also have a short squeeze along with these AI stocks. So we're not going to see that. I mean, the indices could still go up, but you're not going to see that same type of like forced squeeze on this broad range of assets. Now it's going to be more targeted. Actually, another stock that's been heavily shorted that could squeeze higher and probably already has started squeezing higher is HD, Home Depot. I guess there's this. I guess hedge funds are bearish on the U.S. consumer and on housing and what is it, and real estate, and so they've been shorting, or I guess they've been positioned short using derivatives on Home Depot as well. This is another candidate for a short squeeze, although and it's just from like the actual options positioning. It's actually one of the more heavier shorted stocks out there right now. So that's pretty interesting on this one, HD. But I'm not really too interested in playing HD. I want to play like what is getting unwound at the moment. And Microsoft is definitely like the hedges are getting unwound, the puts and everything, all that fear from OpenAI and them losing, like, I mean, even some of the FUD that I've been saying. I mean, I've been saying this too when it comes to AI and software. And when it comes to like AI capabilities, Google is going to be the one that is winner take all. And I'm not the only one that says that. I mean, the fact that I am saying it means everybody knows it. I mean, anybody who actually does research on companies and fundamentals knows this. All right. This ain't new. All right. Everybody got the same data. Okay. So I'm sure other professionals know that it's Google and not Microsoft. Now, some of these hedge fund idiots, they take that information and they're like, okay, well, let's short Microsoft. And they short it too far. And all of a sudden it goes against them. And now they're all running towards that exit all at the same time. It's kind of like this. Remember that analogy I gave you guys? Would you rather be outside looking into a fine restaurant, looking at all these fine people eating fine food, or would you rather be stuck in that restaurant while it's on fire and everybody's running toward that exit at the same time? These hedge funds, they tend to do the latter. They love to get inside and pack inside these crowded trades. And then when something goes wrong, all of them need to now leave that position all at once. It's just the nature of the hedge fund business. If you're in the hedge fund business and you do not take the popular trades that are consensus, that's grounds for getting terminated. That's grounds for getting fired, because your clients will ask you, well, hey, gee, this AI play is hot. Are we in AI? And as a hedge fund manager, if you say no, well, then they're just going to be like, well, why not? And then they're just going to go to somebody else who is. Whereas, if you say, if a client says, oh, are you in AI stocks? And you say, oh, hell yeah, we are. And you can generate a statement that says that the fund bought AI stocks. These clients, I mean, they're not the most sophisticated clients. They don't really know at what point you bought it at. You could have bought it at the highs, but the fact that you're still in it, the fact that you're on top of the story, I guess it kind of like keeps some of these clients happy. Hedge fund business, man, is more of a sales business. Most hedge fund managers that I know, man, are just really not good money managers. They're very good salesmen, though. They're very good at getting other people's money. And signing up for these services, but man, they're really bad at managing money usually. All right, so they're usually very bad at it. It's more of a sales job, and it's more of believe it or not, hedge fund business is more of a business of social access. Like if you're a very, very high-end hedge fund and you have very, very exclusive high-end clients, like one of your little like client outing events becomes like this big networking event, and it becomes like a who's who, and like, those guys, they're part of that hedge fund. Well, gee, like I want to be part of that circle. I want to join that hedge fund. So hedge fund business is more like a social access. We're actually seeing, we're seeing stocks. Some of these stocks are experiencing now a short squeeze. And I think right now we're starting to see that in software stocks. Okay. So a lot of these software stocks are starting to get the short squeeze. I want to get involved. Man, I feel like I'm already too late. But Microsoft, that was the one. That Friday, I wasn't paying attention on Friday. Friday, I was doing something else. I was fucking around gambling on the S&P 500. I swear, this is what I'm saying, man. I try something different, and then I miss out on something like this, right? I mean, Murphy's Law, man, Murphy's Law. But anyway, I missed this on Friday, but Friday was the signal. We should have jumped in on Friday at the end of the day. That would have been high risk still, a high risk setup, because we're entering after a rally, right? We're not even waiting for a pullback. But if one wanted to jump in quickly, that Friday end of day was the day to enter. Okay, it seems like, okay? I don't know if we're going to get an opportunity to get in, to be honest. I mean, it's already 470. It's still going up. It's still going up right now. So, I mean, unless we get a little bit of a pullback, I mean, if he gets to 460, I'll buy. I was gonna say like, let's wait till like 440 ish, but I just don't think it's gonna even get to 440, man. I really don't think. I think it may not even get. It may not even get to 450. It may not even. It may not even get to 450. But okay, so if it touches anywhere near this candle, if it touches that 450, I'm jumping in. I'm jumping in if it gets 450. I'll jump in the Hyperliquid account, and we'll let it ride. We'll put like, I don't know, like anywhere from 20 to 30% of the remaining funds, and we'll let it ride. And we'll probably do like a 10x leverage on it, and we'll set the take profit for near all-time highs. We'll probably make a good, we'll probably make a good 2x, 3x on that trade if that's the case, okay? So, yeah, that's my plan for Microsoft. I don't know if it's going to work out or not. We shall see. I don't even know we're going to get filled on the trade. Probably not. We probably won't be able to get it filled on the trade, okay? JOMO, okay? The joy of missing out. If we miss out, there's going to be another trade just around the corner. And speaking of another trade, I still think Brazil is the next trade, and I still think agriculture is the next trade. Everybody's talking about, it being drone. I mean, maybe it could be drones. Maybe it could be this. Maybe it could be that. But I do think that, sometime after this summer, sometime at the mid to end of the summer, I think there's going to be a big shock in certain agricultural commodities. I'm looking at grains, wheat, corn, soy. We might see the wheat crop come in a lot lower than expected because of the droughts. And then also too, next year, we might see a low corn crop because of the price of fertilizers, okay? Corn requires a lot of nutrition. It's very nutritionally intensive, and also it leaches out a lot of the nutrients out of the soil. So you need fertilizers in the soil, and you need to rotate your crops and all this, and it's a whole thing. So that's why usually whenever you see a commodity cycle, it lasts about 2 or 3 years, because sometimes some commodities are going to actually pop up after the first set of commodities like fertilizers and some of these other commodities go up first, and then you start seeing the second wave of commodities go up, the second wave of grains, and then the meats and all that go up as well too. So that's what I'm expecting right now. And speaking of drones, let's just see how the drone stock is doing. Yeah, okay, the drone stock is pulling back a little bit, pulling back. Yeah. So, if it pulls back a little bit more, maybe I get a little bit more of Unusual Machines. This is the one that we covered last week. Remember, I called it out right here around $23, $24. It popped up to 32. So, for those of you who actually on Thursday's live stream, for those of you who jumped in on Unusual Machines, you got a 30-40% rally out of it. And hopefully you were able to take a little bit of profit. After a 30 or 40% rise, if you take 2/3 to 75% of the position off, the rest of the position becomes free. Okay. I love free gambles. Okay. I love free stocks, free gambles, free positions. That's the best way to play speculative positions. In my view, I always like to have a free position, a free lottery ticket, as I like to call it. And then that way also too, if it pulls back, you can always get more, right? And it just that type of disciplined profit taking, profit management allows you to use a pullback as an opportunity. Whereas if you're fully invested and you get a pullback, then all you feel is a little bit of pain, right? So taking having that disciplined profit management allows you to use pullbacks as opportunities. Okay, it's a mindset thing. Okay, but anyway, Unusual Machines. This is my drone play. I think it's doing well, and if that narrative still continues, I think the unusual machines has a lot to go. I still, as far as like, the next play, and again, I still think it's going to be like the commodity super cycle, especially agriculture. And again, Brazil does really well in that type of cycle. And I really want this stock too. ADM, Archer Daniels Midland. They are very much in the agricultural side of the commodities business. And I do want to get involved in ADM. Hopefully we get a good interest on this. I know we were trying to get in this last week, and we were waiting for a draw. We were waiting for this to go down. I mean, it did go down, but it didn't go down enough. Remember, I said I wanted 71. Or at least like 73 to 71, 71 to 73. 73 would be a good compromise. 71 would be ideal, but a good compromise would be like 73 or so. And it just hasn't done that. Now, maybe this is a lower high that gets into the 73. If that is, I'd like to get it then. All right. So I'm still looking to get into ADM. And again, this is an agricultural play. Also too, there's fertilizers and there's chemical companies. Dow is a chemical company. They make solvents for advanced semiconductors, but they also make urea-based fertilizers as well, which are right now very expensive. Right now, the price of urea-based fertilizers has gone up and rallied. So I think that Dow's probably going to post some pretty solid quarters. I see that it's still on its way down. So our buy price on this that we were looking for is if somewhere between 32 and 33. It is almost there. One more decent red day on Dow, and we get our buy price. So I'm ready to get some leaps on Dow as well. I think Dow is going to go from here to probably back to the mid 40s. And at that point, we could talk about, either selling some covered calls against those leaps or taking a little bit of profit just in case if it pulls back. We can use that as an opportunity to reload up, much like we did with EWZ back in July to December. We were able to play it. We were able to sell covered calls, take some profits, and also reload back up, right, with a bigger, stronger position. So I think we could do the same thing with Dow. I think this might be a good play. So EWZ, Dow, ADM, those are the three names I really want to focus on. And then for the hyperliquid account, for the fast money trades, we're looking at Microsoft and EWZ as well for the fast money trade in our hyperliquid account. And if we see another opportunity in gold, I might take it. Now, I have a rule. After I get stopped out of a position, I will not touch that ticker for a week. So that week ends on Thursday, okay? So after Thursday, if there's another opportunity, maybe like, gold still lingers around these areas, I might entertain going back long on gold. I might entertain that, okay? We shall see. Let's see what happens between now and then, all right? But as far as fast money trades are concerned, I'm looking at Microsoft, okay? I really want to get in on Microsoft as a fast money trade. If I can get in at 450, that would be great. I'm going to be buying probably 3 to 6 month call options, maybe even shorter dated, maybe even like a 1 month, 2 month, depending on the IV, depending on the implied volatility. I shall see. I'll see. We'll see what happens. And that's on the IBKR account, but also on the hyperliquid account. We're not using options. We're just using perps. So from the hyperliquid account, we'll just do like a 10x, right? As it hits 450. Okay. So we shall see. 468. Let's see what happens. Okay. Let's see what happens. Okay. So one of the questions I received over the weekend, apparently, and I understand why, but we've got some members who read our Discord, but they don't necessarily like message, which is fine. They be reading our Discord. And on Friday, you probably saw that I did a little bit of a gamble, Okay, I did what I call the end of day S&P 500 lottery. All right, the S&P 500 lottery. We used to do this actually every day back during the COVID days. Me, Toasty, Ari, Space. Who else, man? MSC. We used to do these end of day gambles. In the last 30 minutes of the day on the S&P 500 on zero DTE options, 0 days till expiration options, where we see this gamma explosion and we're able to make some quick moves. I mean, the options can go quickly to 0, or they can quickly do like a 5x, 10x, up to like 30x. The biggest return I've ever gotten from the last 30 minutes on the S&P 500 0 DTE was a 30x. That's the biggest one I've ever done. I have seen other people get like a 60, 70, 80x before, but me personally, I have never done anything better than 30x. All right. But I know some people who, I mean, you can see the quotes too. There's sometimes like, these end of day options can go up 80x in the last 30 minutes. Okay. So what is this play? I got some DMs. Somebody asked me, hey, on your Discord, I saw that you did some trades. And let me actually see if I can show you. So, most brokerages, after options expire, they get rid of the data on those options. So since those options expired on Friday, because there's 0 DTEs, there's 0 days till expiration on Friday. So because of that, I don't have any price charts for that option, but I can show you because I did it live on the Discord. I typed it all out as I was making the trades. So I can actually show you guys yeah. So let me see if does the Discord pop up? Oh, boo. Yeah, it does. You can see you can see the Discord. Okay. So so on the Discord, we actually had, and I'm just right here. Gambled 0 DT right at 2 o'clock, 2:52. At 2:52 p.m. on Friday, I got in on the 7590 calls for $1.60 a piece on the S&P 500. Okay, on the S&P 500. All right. So here SPX at 1 minute. If you look at the 1 minute chart, right here, 252, right here, around right here, we bought some call options, 0 DTA for $1.60. Okay. And now throughout this, I think I took some profits, along the way. And I also had a free gamble. And let me see, how much did I actually make off of this? I actually wrote it all down. Yeah, and then we were like joking around, and I was like, go, horsey, go, and all this shit. Oh, okay, yeah. So I took 2/3 profit at 225 in 15 minutes. Okay, so in 15 minutes, it went from $1.60 to 225. So I took 2/3 profit. Okay, I only bought 3 contracts. So taking 2/3 profit after it goes up 30-40% means I just get my principal and I get 1 free runner out of it, right? And that 1 free runner, I think I held it until it got to like until it got to $300. $340. So I sold my last one for $340. So it went from $1.60 to $340 in less than 1 hour. But if I had held it for a little bit longer, I think it went all the way up to $500, $600. So that $1.60 option went all the way up to $500 to $600 a piece. So it went from 160 to like 5 or 6. All right. So that's like a 3x in an hour and a half, 3x. So those are the types of it's a gamble. It's a lottery ticket, right? It's a gamble, but it's a gamble that happens every day at the end of day. All right. And also too, I think the height was right here, 3:42 right here. Yeah, 3:42 p.m. And then after 3:42, it collapsed. And so that option ended up expiring worthless. But the point is to get out at one of these high points after like a good number of X's. Now, if you exit too early and the market keeps going up and up and up, well, you just capture returns, right? But the reason why, okay, and somebody asked me, after they saw that, somebody asked me on Twitter, they were like, okay, so I saw you on your Discord, you did this. Why does that work? Why is it that at the end of the day, these small little movements, okay, so it wasn't even that much. It went from like, what, 7,573 to 7,592. That's 20 points. 20 points out of an index that is over 7,500. That's absolutely nothing. That's like 0.2 to 0.3%. How is it that on a 0.2 to 0.3 move, your options value went up 3x, 4x? All right. And it's because at the end of the day, near expiration options have a lot of gamma. Okay. Gamma. All right. Now, what is gamma? For those of you who are not options traders, I'm just going to give you a quick definition on two of the Greeks. All right. Two of the Greeks. All right. So one of the Greeks is delta. One of the Greeks is gamma. Anytime you trade options, those two are probably your most important variables. Okay. And those two variables are the gamma and delta are probably the most influential variables in the price of your option. Okay. So just long story short, just an easy way to think about this. Okay. An easy way to think about the Greeks and delta and gamma is like, you could think about it like this. Let's say that you are driving a car from point A to point B, city A to city B, you're driving. All right. Where you are on the map is like your stock price. Okay. So right now we're playing options on the S&P 500. Okay. So the underlying here is the S&P 500. Okay. So the price of S&P 500 is like your roadmap. Where you are on the road between city A and city B. That is the price of S&P 500. Okay. How fast you're going, your speed, you can think of that as your delta of your option on the S&P 500. Your delta, formal definition of delta is how much does the value of your option change for every $1 move in the underlying stock. Okay? So you can think of it as speed. All right? If you think of the road between point A to point B, and you're driving that road as the price chart of the S&P 500, your speed at which you are traveling, that's your option delta. Okay. Your option gamma is you can think of it as acceleration. When you say, oh man, I can go from 0 to 60 in 3 seconds, that's your acceleration. How quickly can you change your speed? That's what acceleration is, right? So that you can think of as gamma of your option. How quickly does delta change for every $1 change in the price of your stock? Okay, so that's what gamma is, all right? So you have delta and gamma, all right? So at the end of the day, as you get closer and closer to expiration, the near money contracts, the near money strikes, so near money means where the strikes that are closest to the current price, their gamma explodes as you get closer and closer to expiration. That gamma explodes. That acceleration, how much your engine can accelerate goes way up. The potential goes way up as you get closer and closer to expiration. All right. So imagine you're close to expiration. You're 30 minutes, an hour, 2 hours away from expiration. You got this supercharged engine that is ready to accelerate. Okay. And that's why your delta goes up. And at some point, your delta is bigger than, I'm sorry, your gamma goes up. Okay. So at some point at the end, closer to expiration, your gamma on your option goes way up. And sometimes, and around like 30 to 45 minutes before the market closes, the gamma is actually higher than your delta. Your acceleration, your potential acceleration is actually a higher number than what your delta is. So imagine you're in this supercar that has super acceleration, okay? You can go, and in normal conditions, maybe when it's not supercharged, you can go from like 0 to 60 in 5 seconds. But then with this supercharged engine with high acceleration, you can go from 0 to 60 in like 2 seconds, all right? Or even 0 to 90 in 2 seconds, all right? Because you have much more acceleration. That's what happens at the end of the day on options. Your gamma goes way up, so your delta can really explode from very small movements in your underlying, all right? In your underlying stock. So it's just one of those gambles that we play. It's just a very high chance for a very big move in your option for a very small move in the underlying. All right. And that's all it is. Now, usually it works out. The math works out that will make money on something like this, like a 0 DTE at the last 30 to 45 minutes of the day. We'll make money on like a third of those. But out of the third that we win, you're talking about 4x, 5x, possibly even more. Right. And then if you have like, a profit management rules, oftentimes, even when it doesn't work out, you can get out at like only a partial loss. Right. Which also, skews the math. That means you don't need as big of a win because now you're losing a lot less for every loss. Right. So you can manipulate the math in that way. Right. And so with that, it's just one of those gambles that we do. I'm probably going to start doing it a lot more just because I see those opportunities now, especially in this market where the VIX is low, where the IVs are really low. At the end of the day, man, you could just buy really near dated options that are only like 10, 20 points away. And for like a 5-6 point move, you're doing a 2x, 3x, 4x really easily at the end of the day. And so that's the mechanism that we harness for this trade. And so I just wanted to answer that question for whoever it was that asked. Yeah, we do play that. And at the end of the game, at the end of the day, every day on the S&P 500, you have 0 DTE options that expire. And it is probably the biggest casino in financial markets is 0 DTE options on S&P 500 every day at the end of the day at New York Stock Exchange closing. All these crypto bros, all these like penny stock bros, all these like, AI stock bros, they think they're degens, but they're not. If you really want to be a degen, if you really want to do high risk plays, end of day, 30 to 45 minutes, S&P 500, that is the game to play. That is the biggest casino in the financial markets. I have seen some of the most ridiculous payouts from some of those options. And again, you don't win every single one of those. You win like maybe a third of those. But when you do win, you win big, okay? So, it's like one of those things, you just keep it really small. You just buy 1 or 2 contracts, $100, $200 here. And most of the time, yeah, you're probably going to get out of the loss. But every once in a while, man, you're going to make like a couple $1,000 off of it, okay? And over time, it turns out that it's decent money. It's decent money. But, it is a lot of work. It's a lot of babysitting. It's a lot of sitting there watching 1-minute candles. So, I don't really like to do it all that much, but since I've been monitoring the markets every day at the end of the day, I think it may be worthwhile just to do like, a few of them, 1 or 2 of them on certain days. Okay. The conditions have to be right. Like, these days, for this market, I'm not buying any puts. I'm just waiting for the market to go down around that 2 or 3 p.m. And then once I see that gamma larger than delta, I'll jump in. On Friday, those conditions happen to be met. So I said, you know what? Let's go for it. Okay. And if those conditions match again, either today or tomorrow or whatever day it is, I'll definitely post about it on the Discord. But yeah, I just wanted to answer like how that mechanism works. How is it that this thing, S&P 500 only moves like 10, 20 points and your options go way up. Because the thing is, like, if you were to look at the option prices now, they're way higher and you're not going to get that same type of explosion. You maximize that effect the closer you get to expiration. So I start looking for those opportunities about 1 to 2 hours before the market closes. And then we usually don't even jump in until about an hour before the market closes. And sometimes I'll jump in like for the last 15 minutes of the day. And that's usually when it's the best anyway. So, yeah, I mean, it takes a lot of getting used to. It's one of those things where, it's not intuitive at first, but as you do it more and more, and you will actually see, this is what that gamma explosion is, But it's just a fun trade that we like to do. There's potential for a lot of X's. But anyway, I just thought I'd clarify that because I know some of you guys are new to options and you're probably looking at that like, oh my God, does this happen every day? Yeah, it happens every day, but we don't win every day. That's a trade that you don't win every day. You win about a third of the time, but when you do win it, you win big. All right. That's the point. You want to win big and you want to keep your losses really small on that. OK, so profit management, money management is very, very important in that trade. OK, if you don't know how to do money management or bankroll management, this is probably not the trade for you. OK, you really need to be very, very disciplined about your money management. OK, no matter how small it is, because it can affect your mindset. If you keep losing like this, like 5 or 6 times, no matter how small it is, it does affect your mindset. So you do want to kind of manage that and make sure that you get some profit out of it, because if not, you're just wasting a lot of time, you're wasting a lot of effort to lose money, and that can put you in a really bad spot, and that can affect your trades for the rest of your other trades. So you don't want that. You don't want to miss out on the big picture just because you're fucking around with these little shorter dated options, right? But if you like that kind of stuff, if you can handle it, then yeah, it can be another source of revenue for your trading. But anyway, I thought I'd clarify that. So that's the end of day 0 DTE SPX trade. We'll do more of those. And again, if you're in the Discord, I'll notify you guys whenever I jump in. But we got some people that are really, really good at that. Space, he's pretty decent at it. Toasty, shout out to my boy Toasty. I haven't talked to Toasty in a while, but Toasty and I, we used to play that a lot back in the day. But yeah, I still do it every once in a while. If the conditions are right, I'll do it. But anyway, I hope that helps. And I hope that kind of the introduction to gamma and delta and what they are, I hope that helps you too. And as we get more and more into this, as you guys immerse yourself more into that kind of lingo, you'll pick it up. It's just one of those things. You just got to be around more. I gave this example, my first time on my first stream, let's say you get a new construction job. I mean, you're not going to know everything about wood, about foundation, about roofing, about concrete on day one, right? You shadow somebody, and throughout the months, you learn. And all of a sudden, about a year or so later, you're like talking like as if you're one of the guys, right? There's a learning curve to this, yeah? And you just got to keep at it, all right? Anyway, I also wanted to talk about some of the other things as well, too. I have some other things on the agenda. I already talked about Microsoft. I already talked about EWZ and commodities. I think that might be it. I might just cut the stream a little bit short today because I have a lot of things I got to get done, and also too, I know I'm just like rambling kind of because I haven't slept. I haven't really slept at much over the weekend. Again, I've been just really busy with stuff. I'm busy. I've been playing around with some of these AI tools. I'm trying to create some indicators for us, something that we could put into into TradingView, then that we could view this together. I'm trying to make something where we can actually view the open interest on options and actually like lay them out on the chart, so we know from the previous day's close where are the options positions for the day, so we could kind of plan around that for short-term trading and things like that. So I'm actually working on stuff like that as well too. So hopefully I'll be able to release that in the coming weeks. I have to back test. I got to make sure that it's all correct and things like that too. So can't just be like, I got to make sure. I don't want to lead anybody astray with some of these tools. I got to make sure the tools behave correctly. So it does take a little bit of time for me to do that, but we will get that to you guys. Yeah, we'll get that over to you guys soon, and then I'll open it up to anybody. And yeah, if you guys can give me some feedback on how you use those indicators, it'll help me develop some more indicators in the future. But anyway, that's all I had for today. Again, I am looking at Microsoft. I really want to get into Microsoft. If Microsoft gives us an opening, please do so. Oh my goodness. Wow, we went all the way up to 472, man. Dang, that is relentless. Yeah, that's relentless, man. That is relentless. We'll do a final check. I just want to do a final check on EWZ. How's EWZ right now on pre-market? Are we down? Are we up? Where we at? Oh, we up. We up. All right, we up. All right, so we'll see what happens. I mean, again, this is a longer term play. I'm looking for like mid 70s by next year, okay? And if that happens, we're gonna make boku cash. We're gonna make all that money. We're gonna make it rain bird seeds, baby. All right, so I can't wait for that, all right? But I shouldn't get too excited, though. I shouldn't get too excited because you never know, right? We might have to manage risk. You never know, okay? But it's just my biggest conviction right now is Brazil. And I get it. Some of you guys, I've been getting a lot of hate DMs too, man. Some of you guys been sending me DMs. I'm not going to name names, but just because you found one penny stock that did a 5X and you put all your liquid net worth into it, all right, and you happen to be up 5X, which is more than what our hyperliquid account is up by, all right, congratulations. Okay, I don't want to take anything away from you, but just know, okay, what you are doing is way riskier than what I'm doing. All right, so like, don't and also too, remember, trading is about what you keep, not what you make. Okay, yeah, you made a 5X, but are you gonna keep it doing what you're doing? We shall see. We shall see, my friend. We shall see. I know one of you has been sending me some DMs about your plays. All right. And yeah, congratulations on that 5X, on that penny stock. You know who you are. Okay. You sent me that DM talking that shit. Okay. Let's see if you can keep doing it. All right. Let's see at year's end where you at. Let's see. Okay. Let's see where you at the year end. All right. Because yeah, when you're picking penny stocks like that, bro, all right, yeah, that penny stock went from like this dude, like he's all happy about the 5X, and I'm happy you made money, okay? Because money is money, all right. And if you made money, more power to you. But yeah, a stock that's 40 cents that went to $2, come on, dude, come on, man, like. Yeah, like, are you gonna find another one? Like, and if you keep doing that, you think you're gonna be on top. I did the whole penny stock thing when I was a kid, man. Yeah, I mean, it feels great when you win, but more often than not, you don't. All right, so just yeah. Especially when conditions change. But you know what? You do you, man. You do you. I'm happy for you, man. I'm happy for you. All right. All right, guys. Well, in that case, guys, I think we're gonna call it a day here. Oh, you know what? One more. There's one more thing. Somebody asked me, how do you know that hedge funds? How do you know that hedge funds kept buying puts on the way down? It's like, where can you see that? Okay. So first of all, I use interactive brokers, and I have something called also Thinkorswim, which is another brokerage by Schwab. And I can see a lot of the time and sales and options data. For some people that may be a little bit difficult to read, or they might not have access to that. If you have interactive brokers, if you use Thinkorswim, or if you use any brokerage that has real-time options data, you'll be able to find it. Now, if you don't, what you can do is you can go to the CBOE website. That's the Chicago Board of Options Exchange, where S&P 500 VIX options and all these major indices options are traded. They're traded on the CBOE exchange. Okay, that's the Chicago Board of Options Exchange, CBOE, the CBOE. All right. And you can look at something called the skew index. The skew index. Basically, it tells you how expensive far out the money options are. So if you are a portfolio manager and you've got all these stocks that you're long on and you really want to protect yourself from a big market crash and you want to do it in the cheapest way possible, most likely what you're going to be doing is buying really far out the money options. What does that mean? How far out the money? So let's say the stock is $100. Okay. Let's say there's a stock XYZ. It's $100. At the money strike would be a 100 strike option. That's at the money, right? Near the money would be like, 95, 105, $5 away or something like that, whatever arbitrary number, right? Far out the money would be like, well, I want to protect myself just in case if the market crashes 40%, right? That would be like a strike 60, right? That's $40 away. That's 40% away from the current price. That's far out the money, all right? It takes like a 40% drop in order for that option to go in the money. Okay, so that's what we call far out the money. So when you start seeing far out the money options getting more and more expensive, getting bids, that's hedges. That's usually hedge funds buying far out the money puts to protect their portfolio from crashes. Okay, so remember on the S&P 500, we had, let me go back to the S&P 500 chart. Let's go back to the 1-day chart. On the S&P 500, remember, the market started turning down in early March, and it bottomed on March 31st. Okay, on March 31st. Okay, so beginning of March to end of March. Okay. Now, if you look at the skew index right here, you will actually see that as the markets were going down, the skew kept going up. And it peaked right at April 13th. Oh, April 13th. That April 13th. Oh, is that a coincidence? No, it is not a coincidence, okay? So as the market was going down, hedge funds who were over-leveraged, they were over-leveraged on some of these AI stocks. They were over-leveraged on tech stocks because they thought it was going to keep going up. And they over-leveraged themselves. And some of these hedge funds, they will borrow money. They will actually buy stocks on margin. Okay, they will actually borrow money to buy more stocks so they could get more leverage. Right? Because, if I only can afford one share of one stock, and if it goes up 10%, I made 10%, right? But if I have enough money to buy one and I can borrow money and double up, that means for every 10% move in the stock, I make 20%, right? That's leverage, right? Borrowing money to make more. So some of these hedge funds borrowed money. They used margin to buy more of these stocks at the highs right here. At the highs, they were buying, they were leveraged, and then all of a sudden it starts turning down, right? It starts turning down. Boom, 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 down, going down. Uh-oh, we borrowed money. We used leverage to go long. Uh-oh, the broker is calling us. We might get a margin call. Uh-oh. How do we protect ourselves and not get liquidated? Well, one of the ways is to sell calls, because when you sell calls against your position, you're gaining income out of it, right? But now some of these hedge funds, they overdid it. Instead of selling one call for every 100 shares and making it a covered call to de-risk, they actually sold more calls than they had shares, which we call ratio covered calls, which means if the stock actually rebounds, they're on the hook for unlimited losses, okay? And not only that, on the way down, they're also buying puts. They're buying far out the money puts to protect themselves from a crash, and also buying puts stops your account from getting liquidated by your broker, okay? When you buy puts on a leveraged position, or when you buy a put against a long position, you cap your losses. So therefore, because the broker knows that your losses are capped because you have that put option, it stops the liquidation process, okay? It stops the margin call, all right? So As you can see on the skew index, as the market was going down in March, oh no, these hedge funds kept buying more and more puts at the lows, okay? They were buying puts at the lows. They were hedging at the lows. If you're smart, you're hedging at the highs, not hedging at the lows, not going bearish at the lows, okay? You want those hedges, those bearish positions at the highs, so that it protects your main portfolio as it comes down. But no, they didn't. They were over leveraged at the top. They were over leveraged long at the top. And as it was coming down, they were forced to buy puts to stop the margin call and stop the liquidation. So as you can see here, the skew index, boom, 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 boom. And then on April 13th, and this is what forced me to be like, reconsider everything. On April 13th, all of that just unwound. Hedge funds were like, because on April 13th, that is when the S&P 500 gapped up, right? It just gapped up. It was after a gap up. And so all of a sudden, all those hedge funds that bought puts at the bottom or sold lots of calls at the bottom were now feeling the heat. They're now feeling the heat from those hedges. So now they got to get rid of those hedges all at once at no matter what cost. And again, I explained it to you in the beginning what happens. When a hedge fund has to buy back a call or when they have to sell a put that they have in their inventory to stop the bleeding, the market maker has to sell the call to them or buy the put from the hedge fund, right? The market maker has to buy the put or they've got to sell the call. And every time they do that, they have to buy more shares to offset that negative position. All right? They have to offset that bearish position with a long position. So that's why we saw this short squeeze as all the hedge funds were dumping their hedges, buying back their calls at whatever price, also getting rid of the put options that they bought at the bottom, those expensive put options. When IV was at its highest, when implied volatility was at its highest, they bought these really expensive put options. And now that the market's going up, it's bleeding. Those puts are bleeding. It's cutting into their return. And also too, those ratio covered calls that they sold way too many calls. And now they're on the hook for unlimited losses. So they got to unwind all those positions at once. It forces the market maker to then buy up all these assets so that they can facilitate that trade. And that's what we have seen since April 13th to now, that short squeeze. We're about to see it now in Microsoft. I think we've already seen it in Microsoft. Maybe it's already too late. I may not be able to get in the trade, but it's okay. There's always another trade just around the corner. Remember, guys, the mindset of abundance. We don't have to jump into every trade. There's always another big trade just around the corner. Opportunities are always abundant. They're never scarce. Scarcity mindset is that of poor people, okay? I mean, you can be broke and still have the mindset of wealth. And if you do that, wealth will naturally attract towards you, okay? That's just how the game works. I didn't write the rules. I just know how to play the game, okay? So that's how I knew, and that's how you can follow along to see how hedged is the market, okay? You can look at something called the SIBO skew index, and as you can see, that was like a really, really high point of hedging. And this is when, just hedge funds were scared. They were afraid of getting liquidated. They just bought a shit ton of puts right at the bottom too, all right? We're nowhere near there yet. We're nowhere near those types of extreme hedging positions. Of course, skew oscillates naturally, but it spikes up during these times of intense stress. All right. And generally speaking, whenever you see a market come down and the skew is high, it usually puts a cap. It usually puts a cap on how low the market can go, okay? Whenever the skew is really, really high, it means that the market is well hedged. It also means that there's puts on the books, and whenever these hedge funds get rid of these puts, The market maker, again, has to buy those puts, which means they have to buy some of the stocks and go long the stocks in order to keep their books even. All right. So whenever you see a big sell-off and the skew starts going really, really high, it usually means that the sell-off is not going to go that much more. Okay. If you want to see like a sell-off that will last a while, something like 2022. Something like 2022 is a good example of like a downtrend that grinded all the way down and kept grinding its way down. It's because nobody was buying puts. Nobody was hedged. And so there was nobody forced to dump puts. Therefore, the market maker was not forced to buy shares. Okay. So if you want to see an extended drawdown in the markets, you want to see skew very low as the market grinds down. Okay. If the market is grinding down and you see skew going way up, it means that probably the sell-off doesn't have much more left because these speculators, they're going to dump those puts. Okay, they're gonna at some point they're gonna dump those puts, and the market maker is gonna have to buy those puts and then buy the underlying and force the market up. Okay, so that's why that was the big tell for me when I saw that skew pop up, and then when I saw all those derivatives start unwinding all at once at the end of the day, that's when I was like, you know what, I am not standing in front of this freight train. You know, let's see what happens. Let the dust settle. I remember we had those hyperliquid puts. Hyperliquid short positions on Micron, MU. I remember we lost like $10 that day. And I was like, you know what? Let's just keep the loss small. Let's get out. All right. And that proved to be a very wise thing to do. Thank goodness I saw that. Thank goodness I did not try to fight against the market when I saw that. Because once I saw that, I was like, nope, everybody's unwinding all at once. Everybody's in hot water. I am not going to be standing in front of this train. Market makers are going to be forced to buy this as everybody unwinds their ill-timed hedges, because hedge funds are stupid like that. And again, it's one of the dumbest businesses in the world. And a lot of hedge funds and speculators got screwed on that. So that's how I know, and that's how you can follow along. And, you know, if you don't have an IBKR or Interactive Brokers or Thinkorswim account, or if you don't have like one of those brokerage accounts that shows you options data, you can kind of estimate what's going on with hedging activity using the skew index and things like that. So hopefully that's something that you guys can utilize going forward. You don't need to, you don't need to have the latest and greatest like brokerage accounts in order to track that stuff. There's so many free resources out there. Actually, it's the opposite. Most people think that, oh, this information is hard to find and good information is rare to get. And it's hard. It's hard to get free information. I will say this: what makes getting information and what makes research hard is not the lack of information. It's the fact that there's so much information. There's so much noise. It's hard to tell what's useful and what's not. That's actually the problem. There's actually so much free information. There's too much free information. Most of it is bullshit, but there's too much where it's kind of hard to determine what's real, what's not, what's bullshit and what's not. Like, look at that example with IBM. Everybody on Twitter right now is looking at that video of Trump saying, oh yeah, well, IBM stock is probably going to go up higher, right? That was not recent. That was December 10th, but everybody's saying that was recent. That was like, last week. It's not. So again, like, all these things, like, just be careful. There's a lot of information out there. You just got to know what's useful and what's not. And, hopefully, that is another tool in your tool set that you could use. SIBO skew index. I don't check on it on a day-to-day basis, but on a weekly basis, I like to look. I like to see, are the markets hedged? Are they not? Are we underhedged? Are we overhedged? That does determine kind of my short-term thesis on, on short-term price movement, at least for like on a day-to-day, week-to-week basis, okay? So something to think about. And another tool that you can use in your arsenal. All right, guys. Anyway, guys, we'll be back on Thursday, 7 a.m. Eastern. Money Maxxis every Monday and Thursday at 7 a.m. Eastern. We talk about markets, we talk about money, we talk about mindset, all the things that help you get that cheddar to make your life better. All right. So anyway, guys, you could have been anywhere else in the world, but you decided to be here with me. And I do appreciate that 100%. Guys, wherever you're watching this live stream, you can go to the bio section, you can go to the about section and join our Discord. It's the Key Crew. Lock in and break out. We're all trying to make a lot of money. This is going to be our year. There's a lot of opportunities out there. It's time to pick and choose the best ones and ride it out. All right, guys, who fucking loves you? You know Big Bird got your back. I'll see you guys Thursday at 7 a.m. Eastern. And before then, hey, let's hang out in the Discord. Guys, I'll see you guys real soon. Peace.